guys, how are you? Today we're going to go over what a stop run looks like and why it's so important to use options as your protective backstop. So right here we have a chart of the S&P 500. This shows 1 day's worth of activity from the beginning of regular trading hours to the end and before and after. So the really cool thing about futures is they trade a little bit less than 23 hours of the day. So it constantly gives you access to the world's markets in the form of US stocks, no matter what happens at any time of day. So what I mean by that is it could be, you could have some crazy news come out of China, and that affects the world as a whole. So what you would see is you would see the S&P 500 futures contract either go up or down based on that news. So the reason I'm showing this, it's very important to look at this chart. You can see the volume starting for the day. Now, as the day progressed, you just had a unidirectional day to the upside. And you can see the volume pick up towards the end of the day. So the high of the day was 24.75. And right after hours, so you can think of it like this, there's a lot of people still caught short in this market. Now, they have uncle points. Now, if certain people thought that the high of the day would have been yesterday, based on whatever type of news with China or the government shutdown, they would say, okay, my uncle point is today's high, which was 24.75. Now you can see that when the regular trading hours, so US equity trading hours, stop, you can see the liquidity dries up significantly for the futures market. Okay, so the high of the day was 24.75, and you can see that it doesn't take a lot of effort to push the market above the high of that day, 24.75. So what you see here is once that was triggered, it's like a landmine or a depth charge that hit its target. All of those people that were short, they cried uncle and they said, get me out, I'm done. And you can see there was an immediate up move of more than 3 points and a nice little spike in volume. So these are the little games that are played on Wall Street and all over the world since almost time immemorial for the ability to move people in and out of positions. The bigger hand, the people with the most chips, push the market a little bit further to the upside. They knew they wanted to take it higher, and I say they not as this big ethereal group of people, but just the markets in general wanted to push the market higher to trigger the people that were on the opposite bet, and it took the market even higher. So the people that are long, that want to go higher, they knew that the uncle point was the high of the day. And you can see this by the movement after hours. So, by the way, this happened at 6 p.m. at night. So it's so important for you. You shouldn't expect yourself to sit in front of a screen all day and protect your positions. What you could do, if you think it's worth having a short position, okay, you could have a call option to protect yourself to the upside. Now, what that means is if the market continues to go higher and higher, the call option goes up in value at a predetermined strike that you've bought and for the amount of time that you want to be protected for. So you've paid a premium for that call option. Now, after that, what occurs is that is your stop. You can say, okay, my uncle point is that strike price that I bought minus the premium that I bought it for. Now, the market will go up or down based on whatever happens in the world, but you're not supposed to predict that. You're supposed to predict your risk. So if the market goes up, that call option goes up in value, but your short futures position goes down in value. And at the point where it passes that strike, it becomes in the money, and you're protected 100%. You really should have 2 calls for every 1 short future that you have. But this is a good way to ride out these back and forth movements. It is so important to learn these techniques. The main thing here is what this does is it takes the fight or flight out of your decision-making process, which is one of the more key elements to managing your stress in everyday life and with investing your money. Guys, if you have any questions, do not hesitate to ask below, and we're going to talk about this in many more videos to come.